morning, and welcome to Investment Talk TV, brought to you by the award-winning advisors at Legacy Wealth Management. And now, with the latest information on the stock market, your investments, and retirement opportunities, here are Legacy Financial advisors Paul Meyers and Brady Brunsvold.
Well, here we are again, Brady. It's episode number 13 of Legacy Wealth Management's Investment Talk TV. Hello, Brady.
Hey, good morning, Paul, and everybody out there watching. Excited to be here. I hope everybody had a great Christmas holiday.
Oh, yeah.
Also, turned into winter over the last few days, so that's kind of fun to see, and I'm ready for spring.
Now, your prediction is we're not going to get any more snow before like spring, right? No more snow.
I honestly, I like snow, so I kind of hope that we get a little bit. I could do without the blizzards, though. One blizzard's enough.
Yeah, you have some amazing boots, Brady. I noticed. Yeah,
I do.
For the blizzard, you can get through the snow and trade stocks and do whatever you need to do, can't you?
You know, I'd rather be warm because you can always take a couple of layers off, but you can only put so much on, right? Or does it go the other way?
I think it goes the other way, Brady, but thank you for bringing that up. And a big welcome wherever you may be watching today. This is Investment Talk TV, brought to you by the advisors at Legacy Wealth Management. Just a reminder that Legacy Wealth Management works with LPL Financial, a registered financial advisor. That's where we get our investment advisory services from, and we're proud to work with them. And if you have questions or concerns about your investments or retirement, well, you've come to the right place. This is Investment Talk TV, and for 13 weeks now, Brady, we have been dispensing what we'd like to say would be some interesting information and knowledge about investing and retiring.
Well, I think that's exactly right, and we say it almost every episode that, we consider ourselves to be somewhat of a help desk or a call center where we, obviously work with our clients and we try to answer any questions that our clients have. But a lot of people call in and they're not even clients, but they have questions and we're happy to answer that. And sometimes those questions turn into clients and sometimes they just, say thank you and they're on their way. And that's perfectly fine. Our job is to educate and to help people that don't have help either from their current advisor or they don't know where to start. So that's what we're here for. That's what we're trying to do today. And hopefully you get a little bit of fun and education out of the next half an hour.
And, right before Christmas, I had a call from somebody who said, hey, I'm planning to retire at the end of the year, and that's not very far from now, only a week or so. And they said, I really don't know how it all works. I don't know how this COBRA thing works. I don't know how my pension plan goes. They're offering me a pension buyout. Should I take that? What do I do with my 401k? Had some really good retirement-type questions, and we were able to give him some help, and he's coming in to see us, and I think that's a good deal. And speaking of coming in to see us, Brady,
yes,
we've got some policies and procedures in place. We are concerned about the coronavirus and doing our best to make sure that we stay on top of it.
Yeah, and we're kind of doing that remote office at least through the holidays, the next week or so. Just people are traveling, and we realize, Paul, that there's last minute year end kind of distributions or contributions that people are looking to do. So we're absolutely open, but we are working remotely at least through the holidays, just because there's so much uncertainty, and there's still a lot of the concerns around the virus going on. So we're still here, but we'll be doing any meetings over the phone for the next couple of weeks, and then the start of the new year we'll go back to normal.
You bet. And just so our viewers know, we are concerned about dealing with important investment topics and things that are going to make a difference to you. Later on today in the show, we're going to talk about tax loss harvesting, a topic that we've brought up very briefly in the past. We're going to talk about rebalancing your portfolio and things like that. And we've got a lot of things that we want to bring to your attention. This is, I think, our last show before the new year, isn't it, Brady?
I believe so. So we haven't officially been canceled yet. So hopefully we'll be back after the holidays.
Good news, Brady. I think we're going to be on all during 2021.
Oof, scary thought.
It is a scary thought, but wherever you are today, and we cover quite a wide area. It's kind of fun when we put up this map of all the interesting places that we like to go, and we didn't even include South Dakota. I don't know what we've got against South Dakota, but lots of little red dots up there for North Dakota and Minnesota, and really kind of underrepresents all the interesting places that people come from. I get a kick out of it when we have somebody, from Sioux Falls, and the next minute somebody from War Road and somebody from Williston and Bismarck and Jamestown and all those interesting places. It's it's nice to have a big reach. And when you're up here in North Dakota and Minnesota, one thing we've got is a lot of territory to cover. That's for sure.
And the beauty of technology, and like I mentioned, the remote ability that we have. We actually had some clients in Western South Dakota just come on board, and even a couple of clients out on the East Coast just joined us. So we're everywhere. Everywhere you need us to be, there we are.
That's a great way of putting it, Brady. We've got a lot of topics we're going to talk about today, and as I mentioned, we are going to talk about some important investment topics like tax loss harvesting and rebalancing your portfolio. We're also going to do 5 points in 5 minutes because, we think it's, we're close to the end of the year, and we think it's important to cover some topics like that. We're also going to take a look at the stock market week in review and some individual stocks that have been performing. But first of all, Brady, one of our favorite topics, because we get a chance to hear from you people out there, we call it the investment question of the week.
It's now time for the Legacy Wealth Management question of the week.
Fill us in on it, Brady. I know we had a great question last week. How'd that go?
Not only did we have a great question, Paul, we had a lot of good answers, most of them right, not all of them. But the question, if you don't remember last week, how many companies are included in the Dow Jones Industrial Index? We're looking for a specific number for that. And which of the following is not a member of the index? Either A, Coca-Cola Company, B, Salesforce, or C, Pfizer. And of course, we had a lot of great guesses. The winner... Linda Z from Grand Forks. Linda, congratulations. We'll be sending you a prize package filled with goodies just for you, so congratulations on that. And, of course, the answer, Paul.
Yeah, that's what I was wondering, because I entered myself a few times hoping to win something.
You must not have answered correctly.
Although I think I probably did, yeah. What do you got, Brady?
So the answer is there are 30 companies in the Dow Jones Index. The Dow 30, it's often referred to, and many of you probably knew that. And of the three, Pfizer is not on the Dow 30. So lots of great guesses. And if you didn't get it right this time, Paul, maybe you'll get it right next time for our next question.
There was a company in there that a lot of people don't know, and that is Salesforce.
CRM, I believe.
And we use, I always thought CRM stood for can't remember much, but maybe not. CRM is a company we actually use. Salesforce is a company we use because it helps a lot of businesses with their keeping records and their note-taking. It's actually a client retention management is what CRM, I believe, stands for. And great company, and obviously doing very well during this particular pandemic.
Yeah.
And a lot of interesting companies out there, some of which we recommend, some of which we don't, but it's nice to be able to talk about them. But you know what, Brady?
Yes.
We actually have an investment question this week.
We do.
But it's so new, we don't even have a title slide for it for the television show.
Well, Paul, what is the question of the week for this week?
Well, let's see if I can remember it exactly. There is a well-known country western celebrity who donated some money to help get the Moderna vaccine researched properly so that it could come out. What is the name of that well-known country western celebrity who donated to help Moderna become a winning vaccine?
All right, guys, if you think you know the answer to the question, what well-known country western celebrity helped contribute to Moderna's research, send your guesses or answers to team, T-E-A-M, at legacywealthfargo.com. Answer your name, number, address, so that we can send the prize if you're correct. And if you have questions or comments, please include those as well.
It is kind of fun to hear from people all over and hear the comments that they have to make about the show. And we enjoy getting a chance to reach out to all of you and do the best we can to try to impart some investment knowledge and expertise and give you an idea of what's going on in the market. In fact, in just a minute, we're going to take a look at some of those important topics for the end of the year. But I think right now it might be a great time to take a look at kind of some of the broad economic trends, especially here towards the end of the year, the broad economic things that are moving the market. And I went back and took a look at these with Brady, and we picked out some of the best from the year, kind of the top 5 various things that we've talked about during the year. We call this segment 5 Points in 5 Minutes.
Every week, the advisors at Legacy Wealth Management, with the assistance of economic researcher Mick Higley, comb the economic reports, and we come up with data and information that's helpful as we analyze the markets and put together our advice. We call this
5 Points in 5 Minutes.
Well, there it is, 5 points in 5 minutes. Let's take a look at point number 1 in 5 points in 5 minutes. The number of existing single-family homes for sale has been tracked nationally, Brady, for something like 38 years, back to July of 1982. The total peaked in July of 2007 at 3.4 million, but has now fallen to an all-time low of 1.22 million in December of 2019. Those are single-family homes that are available for sale. Kind of amazing that the number is down that low. No wonder they say the housing inventory is pretty tiny.
Yeah, pretty crazy. All right, point number 2, first-time jobless claims for the week way back the end of February 1st, 2020, were 201,000. Its lowest level since way back in November of 1969. And just 7 weeks later, jobless claims for the week ending March 21st of this year were at 3.28 million, which is, of course, a U.S. record. What a swing in the span of just a few weeks.
Boy, no kidding. We went back and did some research along with Mick Higley, who helps us put together all of this for our point number 3. It talks about if you were born back in 1987. So I'm sending this out to our listeners who'd be what? Let's see, 23. 33 years old. For you who are 33 years old, you turned 33 in 2020. You've lived through 5 bear markets and 3 recessions. You've also lived through 4 bull markets, 4 economic expansions, and benefited from the lowest interest rates in history.
Wow.
And your life expectancy as of today, let's see, how can that be? They're 33 today, and they're going to be, their life expectancy is another 47 years. I was thinking, they got another 80 years ahead of them? No, that would be a lot.
Pretty good run, yeah. Wow.
So that's kind of interesting for people who are 33 today. Their life expectancy is now about 80 years.
Yeah. Well, and, it seems like a lot of things going on in the world that they were living through, but, no world wars, no major conflicts for that time period, so good and bad.
I think all of that happened during the year 2020, didn't it?
Seems to be the case.
Boy, no kidding.
All right, number 4. All 50 states maintain a, quote, rainy day fund that may be accessed as a result of an economic emergency. As of July 1st of 2019, California, they had a $19.2 billion set aside. Texas, $7.8 billion. New York had $2.5 billion, while Illinois just had 4 million smackaroos. A little low on the old reserves in Illinois.
Do you know what the number is in North Dakota?
It's pretty substantial, I think, because of the oil fund, right?
$7.5 billion, I believe.
That's
a
per
lot of money,
pretty high.
And they're not going to spend it either, doggone it. They're
No,
going to.
sure
That's
don't
their
seem to
rainy
want to.
day fund, their legacy fund, and they're going to hang on to it the best we can. Hey, let's take a look at our final point number 5 in our 5 points in 5 minutes. An estimated 159.8 million people voted in the 2020 presidential race. They were all alive, I might add, representing 66.8% of the 239.2 million voting eligible Americans. This number of voters is an all-time U.S. record, and it's the highest percentage turnout in 120 years.
Wow.
And let's face it, there was a lot of passion, a lot of excitement in this last election.
A lot of strong emotions.
Yeah, there sure was. Well, anyway, so much for our 5 points in 5 minutes. Just a reminder that if you are interested in talking to us at Legacy Wealth Management, you're welcome to give us a call at 701-365-8083. Give us a call at any time because we've got our staff available to answer your questions and talk to you. And we'd love to hear from you, whatever your question may be or however we may be able to help and wherever you are located. And if it's necessary for us to come to you, we can do that too. So give us a call at 701-365-8083, or Brady, they can email us.
Yes, team, T-E-A-M, at legacywealthfargo.com. A lot of questions, Paul. We get questions all the time, even from non-clients, like I mentioned, end of year, or maybe you're not hearing from your advisor during the craziness that we've seen this year. Any kind of question, we're happy to do that. And some people say, you know what? I'm still working. I haven't retired yet, but I don't even know where to start. I don't know how to start planning for retirement, and I'm really getting sick of work. So, we can at least, even if you're not a client, we can point you in the right direction and make sure that you understand what you have to do in order to prepare for those kind of major life events.
You know, Brady, I don't know what questions you've had to deal with lately at the office on your own when you get a phone call, but one of the more interesting ones I got just a couple of days ago was from a current client who has been a great client for many years. But this person is now retiring, and they said, well, how does this all work? I mean, how do I get a check every month sent to me? And so we went through the program, and the nice thing is you can either have a hard copy check sent to you, or you can have the electronic ACH version, or whatever you might want to have, and you get to pick the number. We'll help you determine what, may be the most doable. But then not only that, once you pick a number, it's our job to go in and figure out, well, okay, how do we come up with that cash? Is it coming from dividends? Is it coming from interest? Is it coming from us selling a particular security or whatever the case may be? The cool thing is we're trying to take the pressure off you. We want to handle that pressure for you so that you don't have to worry about it. And I can tell you that literally every Monday of every week, Carrie comes into your office, Brady, or my office and says, hey, I need this much cash cleared up for this account, for that account, because it's going out for a distribution. So know this, that if you're working with us, we're going to help you figure out exactly how to do the retirement program and how to get your distributions.
Yeah. Our job is to make things easier and take the guesswork out. That's what you're, hiring us to do, and that's what we're going to do. So if you're unsure, if you have questions, even if you're not a client, give us a call. We're happy to help, and that's what we're doing here today.
That is exactly right. And speaking of trying to help, Brady, there are a number of topics that we get asked questions about all the time. I guess you could also almost call them frequently asked questions. And hopefully these will be helpful to our viewers here on Investment Talk TV. These are some things that people may want to be aware of as we get closer to the end of the year. And we're only a few days away from the end of the year. Yeah. Which, by the way, Brady, I hope you're planning on having a good New Year's Eve and a good New Year's Day. Yeah,
we I have 4 kids. And we don't do the going out bar thing anymore. We cook a bunch of mini weenies and barbecue sauce and meatballs and chicken wings, and we do family board games. We play checkers and chess and watch a bunch of silly movies. And it's probably my favorite night of the entire year. Strictly family time. And I don't know if I've made it up to midnight in the past few years. So we watched the East Coast one just to save myself an hour on that.
Oh, yeah, that's very important to do. I can tell you, as you get older, you'll discover it's harder and harder to make it to midnight. And sometimes you just have to declare that, 10 o'clock was pretty
that's
good.
Right. I'm sure it came in just fine.
One of these days, Brady, we're going to have you bring in pictures of your kids because I'll tell you what, next to my trip to the Grand Canyon, taking a look at pictures of kids is pretty high on the list, I'll tell you. Bet. Well, in any case, let's take a look at our first topic with regard to things that people may want to be aware of as we head towards the end of the year, and that is tax loss harvesting. Now, we talked briefly about tax loss harvesting. That's hard to say real fast.
Tax loss harvesting.
Brady, you said it very well. Why don't you see what you can do as far as explaining it?
Well, as you can see on the screen there, it's basically the selling of individual securities or certain funds or ETFs at a loss. And you use that loss to offset potential gains you have throughout the year. Now, this typically applies not to your IRAs, but to a taxable type of an account, an individual account.
Tell us why it doesn't apply to an IRA.
Well, in an IRA or a Roth IRA, either one, everything you buy and sell, there's no taxable gains or losses inside of that vehicle. Everything grows tax-free up until the time you cash it out. A Roth IRA comes out tax-free. However, a traditional IRA comes out, you have to pay tax just like you're getting a paycheck from ordinary income. However, if you have an individual taxable account or a joint taxable account, that does have potential taxable consequences every time you sell a product. And so what we do for a lot of clients that have those type of an account throughout the year, we'll watch and say, well, if this one's down, it's an opportunity to sell out of that and maybe even buy something that's similar strictly for the reason of harvesting those losses so that later on, if you sell ones that are way up, you can offset that gain and minimize your tax consequences. And it's just one more service that your financial advisor should be providing.
And of course, as always, we tell people to be sure to consult your tax professional for tax planning and things like that. But we know enough about how the tax loss harvesting program works that we can be pretty helpful with you on that. And by the way, Brady, this topic wasn't on my regular list, but what about mutual funds? People aren't aware that you can buy a mutual fund and you don't sell the mutual fund, and yet you can get some some tax liability, can't you?
Yeah, and a mutual fund is just a basket of individual stocks or bonds or cash or any type of asset, really. But throughout the year, there's someone watching that basket. They're pulling things out that are no good, putting things back in that they think will perform better. And as they do that, that can generate taxable consequences. So you typically see those distributions and purchases realized or claimed at the end of the year. So you might see some of those mutual funds not necessarily the most efficient way to invest in a taxable type of an account.
And that's another reason why at Legacy we are often very careful in a taxable account about when we buy mutual funds in the month of December.
Absolutely.
The fact is that it all comes out in the wash. You're not going to pay taxes on something that you shouldn't have paid taxes. It's just that you might pay taxes earlier than you thought would be too likely, and that's kind of important. Kind of a related topic to tax loss harvesting is rebalancing a portfolio. And it's a very important thing that we do not just in December. We do it all year long, taking a look at what's doing well and what isn't doing well.
Yeah.
I can tell you, Brady, that in my personal opinion, I'm not a big fan of selling things that are doing really well and reallocating to things that haven't been doing well. But that is one of the concepts, isn't it?
Yeah, and so here's the concept. If you have January 1st, you have a theoretical proportion of, I want to have this much in technology, this much in dividends, this much in XYZ, whatever. And then all of a sudden, one of those little sections does really, really well for the whole year. And also at the end of the year, that is disproportionately high. Maybe you had a 10% allocation initially. It's grown so much now that's 30% of your portfolio. And the theory with rebalancing is say, well, listen, it's done so well. It's too much. It's too big of a chunk of your portfolio. And I think what you're saying, Paul, is, when you rebalance back to 10%, you're basically punishing the best performing part of your portfolio. And that's not saying, that you necessarily do or don't want to do that, because maybe we think that section is not going to do as well going into the next year. But you shouldn't rebalance just for the sake of rebalancing. You should understand the reasoning behind it.
I agree with that completely, Brady. And of course, I knew that we both were on the same page with regard to that. When I go into an account at any time of the year, I am looking for that which has been performing well. I don't want to chase the best performers, but I certainly don't want to ignore what they've been doing either, because an object in motion tends to stay in motion, and something that's been rising has a tendency to continue to rise, at least up to a point. So when it comes to rebalancing, one of the things that we try to do, and I'm sure many other financial advisory firms do this as well, but I know that it's a hallmark of what we try to do, is we're looking for things that are going to do even better for our clients. And that's what you should be doing, in my opinion, as an investor out there, is you should constantly be aware of, well, what could be doing better? Now, I do get a kick out of it because sometimes we'll have a security that was up, 17% in a given year, and someone will say, well, I don't know, this one was up 18.5. Maybe we should switch. And, that's kind of silly. You're chasing the hot dot at that moment. And, we try to teach people that there are certain expectations that you can have from an account, and not to go too overboard looking for the absolute best one you can.
Yeah.
Brady, one more area that becomes very important towards the end of the year, and that is beneficiaries, particularly for an IRA or for other types of accounts.
Yep.
Take our viewers through the mindset of what goes on with regard to checking your beneficiaries.
Well, it's a detail. And it's an important detail, because when you pass away, you want to make sure that your accounts are set up to go to the right people. If possible, you want to avoid things like probate or going to your estate and having somebody else decide on where those assets go. So, especially in an IRA or a Roth IRA, you want to make sure you have your beneficiaries. And it's very easy. Life changes, things happen, and you say, you know what, I want that to change. We can change that whenever you want. And it's just amazing to me, Paul, how many people we talk to at the end of the year, and they say, well, I don't even know who I have as my beneficiary. So it's important to make sure you understand that, and we always recommend you have a list of everything that's important as far as contacts, who your beneficiaries are, and reviewing those on a regular basis to make sure you know, in the case you pass away, someone can easily gain access to that, whether it's your spouse or your children. They know who to call and how to handle it.
Very good, Brady. I have one more point, and then we're going to take a look at how the market has been doing over the last week or so. The other point has to do with Well, we talked about confirming beneficiaries. I want to remind people that required minimum distributions have seen some changes this year. And if you weren't familiar with it, remember that no required minimum distribution is due from your IRA types of accounts in the year 2020. And the new age for required minimum distributions is 72. That becomes kind of important because many people weren't aware of that and they think, well, I need to take this by the end of December. And you don't have to take it by the end of December. So with that in mind, and since we're running a little low on time, we're going to do two things. We're going to talk about how the market has done over the past couple of weeks, and we're going to take a look at a couple of slides that I think will show us that. And then, assuming we have some time, we're going to talk about some advice and tips for the year 2021. So first of all, let's take a look at that slide that shows the stock market, the S&P, I believe, over the last week or so. Yeah, we're going to take a look at the week in review.
All right. Well, I think Paul, you mentioned that we saw some movement in some indexes, but if you take a look at the Dow specifically over the past week, that's actually I think for the whole entire month, going back into the last week of November. But the last week, Paul, really has gone up and down, but kind of came back to where it was a week ago.
Exactly. It reverts back to where it was, and that is so typical. And it's another reason why sometimes we tell people, hey, just hang on, things are going to be just fine. And sometimes we tell people, you know what, this is up high enough, let's take it now, we can buy it again when it goes low.
Absolutely.
And this shows the Dow Jones average. It looks like an escalator gone wild here, up and down and up and down.
Yeah, all over the place. And, it's actually come back quite a bit since it fell off a bit in October, but we've seen that come back. Now, if you take a look at the NASDAQ, of course, a little bit more tech heavy. But wow, that one for the past month or so has really done well. And, people have kind of questioned, Paul, that is tech falling out of favor? Are things not looking so good? But I'll tell you what, it keeps on trucking.
Technology has been one of our favorites for years, really, at Legacy Wealth Management, and we'd like to think it's going to continue going forward. In fact, the concept of continuing going forward brings me to what we might expect for the year 2021.
Yeah.
Brady, do you think the coronavirus is still going to be a big issue as we move into 2021?
Well, I think especially at the first quarter, we'll see that. It's going to take time for these vaccines. They're still somewhat unproven, and it's going to take time to get those out. But eventually, we're going to get beyond this coronavirus.
And, another topic that we often discuss is growth versus value. And for me, I still think growth is going to be strong going into the new year. But when you take a look at some of the value companies out there, airlines and other places like that that have beaten down, they've got to come back someday, don't they?
That, and even look at some of those retailers. They've done a great job with their online presence. They've moved and incorporated online sales into the brick and mortar, Targets of the world, Walmarts of the world. Watch for them to see what they do, because I think you're going to see some tremendous fourth quarter earnings.
The long and the short of it is, both Brady and I believe that we are definitely at an inflection point in the market. And if you have questions about your portfolio, your retirement, your IRA, or anything to do with investments, well, we'd urge you to give us a call at Legacy Wealth Management at 365-8083, because we're going to be there to help you. And whether you talk to us or to a different financial advisor, this is definitely an important time in the market and an important time for you to be as active and as involved as you possibly can be. We've had a great 13th episode today, Brady. Thanks for being here, buddy.
Thank you, sir. Appreciate it.
And we will look forward to our upcoming episodes during the new year, and one more episode coming up. Until then, I'm Paul Meyers with Brady Brunsvold from Legacy Wealth Management. Thanks for watching.